Schwab Advisor Services is a proud supporter of the RIA Edge podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com. Hi, everyone, and welcome to the RIA Edge podcast. I'm David Armstrong. This is, as you know, the podcast where I get a chance to speak to principals at RIA firms about their growth strategies. And today I'm thrilled to be speaking to Chris Erblich. Chris is the CEO of TFO Wealth Partners, TFO Family Office, and the TFO Trust Company. And we're going to get into the different entities there and why he chooses to run the business that way. Chris, thanks very much for joining us on the RIA Edge podcast.
My pleasure. Absolutely thrilled to be here.
Chris, I think it's an interesting firm. As I look at it, I see TFO Family Office Services here as sort of the firm that I think was most familiar with. You have TFO Wealth Partners as well as the Trust Company. Can you just give us for folks who aren't as familiar with it, the 101 on TFO? Tell us about the firm, the three divisions or the three different practices, and where you're at now.
You bet. Thrilled to. So what we have is three distinct companies. So we have TFO Family Office Partners, which is headquartered in Phoenix, Arizona. We have about 81 colleagues, about 25 of them are CPAs. We are a full service multifamily office. We serve about 330 families. And again, all the services you'd expect of a multifamily office. Probably 25 CPAs, 10 folks in our accounting and bill pay, help with philanthropy, of course, financial planning, investment advisory, estate planning, all those things. It is a full service multifamily office. So think about it, 330 families, about 81 colleagues. We manage about 4.5 billion of assets. We have a pretty robust tax practice as well, again, with about 25, those folks. That is a multifamily office. Now, in Ohio, we have a wealth management firm, TFO Wealth Partners. That firm, while we have some clients that fall into the family office space, we also serve a broader group of clients. We have about 1,500 clients there. We have about 63 colleagues, and there we manage about 5.5 billion of assets under management. We have a 401k practice as well. So if you think about the Ohio model, 100% basis points for assets under management. That's how we get paid.
Mm.
In Phoenix, that's not the case. We have, of course, lots of that. We also have some clients where it's basis points for net worth. We also have clients who literally just pay us a flat fee for family office services. And then we have the tax practice, and we charge separately for tax compliance. So you can see those two, they're both RIAs, but they've got different models. And they have different leadership teams, and they're run independently. Those two RIAs combined forces in one respect to form a South Dakota public trust company that serves about 100 different families, manages about 3 billion of trust assets. That TFO Trust Company is owned 50-50 by the two RIAs. So we have two RIAs and a trust company all under that TFO umbrella. But what we're trying to do is fill the needs of what our clients actually need and what they actually want. The one other point that I'll say is, although the service offerings are slightly different, much is the same, especially the purpose. We are absolutely a purpose-driven firm, and our purpose is to help families, period, full stop. We don't really care if we're helping them, manage assets, or, their dog got sick and they need a specialty vet for their sick dog. We just want to help families. So I say to our folks all the time, just measure your day by asking that one question. Did you help a family today? And I think if we do that, and I don't just mean clients, I mean colleagues as well. I think if you do that, good things happen. So that's really what ties the firms together, is the purpose-driven firms.
Interesting. Well, give me the background on how you came there. I know you come out of the legal world. You were a practicing estate attorney, I believe.
Yeah, that's right.
Was this were both of these firms always under the same ownership umbrella, or what was the history there?
Yeah, it's a great story, and one of those stories of, would love to pretend that I had some grand vision. or that we did. We didn't, right? Things happen. So my history is I'm a lawyer by background and also a CPA or maybe a recovering CPA. I don't know. And I am still a partner in a big giant national law firm called Hush Blackwell. I
Mhm.
do estate planning for ultra high net worth people. And so back in the early 2000s, I went to the law to my partners at the law firm and I said, "Hey, I think we have a problem." And so they said, "What's the problem?" I said, "Well, we're getting calls to do estate planning for ultra high net worth families." They said, that does not sound like a problem. I'm like, "Well, no, it is, because we're getting calls not from the clients, but from their family offices saying, 'Hey, would you serve this client?'" And we're not actually meeting the client. We're meeting their family office. And what I'm worried about there is we don't have a relationship with the client, we have a relationship with their family office. And that's problematic for us. And they said, "Well, what do you think we should do?" And I said, "Well, I think we're going to need to open up our own multifamily office." And they said, "What's a multifamily office?" And I said, "Well, it's kind of like one place that you can go that coordinates all financial services things for clients, sits on their side of the table, very much like a lawyer, objective, only gets paid from the client, et cetera." And they said, "Great, what's the revenue model?" I said, "Well, it's generally basis points for assets under management." They said, "We don't know how to manage any money." I said, "Yeah, I don't either. But we could probably partner up with someone who does." And they said, "Okay, do you know anybody?" And so we did, and we found somebody who I had been working with, who is my business partner, Cleves Delt, who was in the investment advisory business, primarily at dimensional funds, if you know
Mhm.
that,
Sure.
dimensional funds shop. And I said, "Hey, let's create the Hush family office. You own part of it, Cleves, and I will own piece, and then the law firm will own a piece." And we did. And we created the Hush family office, David, in 2006. In 2008, the chairman of Hush came into my office and he said, "Hey, we're going to merge with another law firm of equal size. We're about 350 lawyers. We're going to merge with another one. It's about 350 lawyers." I said, "That's great." He's like, "Well, there's a problem in the deal. They've like called off the deal." I said, "Why's that?" They said, "Because they don't like this idea that we own a piece of an RIA, of this
Mm.
multifamily office. They don't want it."
Interesting.
And I said, "Okay, what do you want to do?" And he says, "Well, would you buy us out?" And I said, you know, "How much?" And he told me the price. And I said, "Yeah, sure, we'll do that." That business right there is TFO Wealth Partners in Ohio, that is owned 50-50 by me and my business partner. And now we've admitted other partners in with, phantom stocks. We've got leadership, et cetera, in there. That is how that started. That is the Ohio business. It was originally the Hush family office. So
Interesting.
now, fast forward, I was living in St. Louis. We've got this, TFO Wealth Partners in Ohio. I moved from St. Louis to Phoenix in the middle of 2009. I wasn't very bright. I moved to Phoenix
Mm.
in July of '09. It was a little warm. I thought the movers might die. Anyway, we're going along. I'm doing the law practice. We've got this business in Ohio as well. And I was going to a meeting with a pretty high profile client in Phoenix, and his family office provider was at the meeting as well. The client was late. I said to this family office provider's name was Scott Horn. I said, "Hey, Scott, how you doing?" He says, "Not great." I said, "What's wrong?" He said, "Well, we had a multifamily office. We were bought by Gen Spring. It's just not a great fit. And I really wish we could get back to something more, holistic, where it's just, we're not owned by a bank. It's just us. We're just serving clients." And I said, "I've got one of those in Ohio. We could start one in Phoenix." And he says, "Yeah, the problem is I have a non-solicit for employees and I have a non-solicit for clients. What would we do about that?" And I said, "Well, don't solicit. Like, for real, don't. Like, don't cheat, don't solicit. I'll put an ad out saying we're starting a multifamily office in Phoenix. I'll interview a bunch of the people, whoever applies. And if what you're describing is right, that the Gen Spring office is kind of imploding and people are going to different firms, I bet they'll interview." I interviewed 20 folks. We hired 17 of them. There was about 40 some odd in the Gen Spring office in Phoenix. So we hired 17 of them. And I remember saying to my wife at the time, "Hey, we're starting TFO Family Office Partners here in Phoenix. And, we're hiring 17 folks." And she said, "Well, do you have any clients?" I said, "No." And she's like, "Well, wait. Are they not bringing clients?" I'm like, "Yeah, they can't. Right? There's non-solicit." And she's like, "Well, what if clients don't call or whatever?" I'm like, "Well, then we're going to lose about $2.3 million. And Cleves and I, my business partner, we understood the risk, but we were good with it. Well, of course, some clients did call us, and then we've just grown over time. Where again, now we have 81 colleagues and about 4.5 billion of assets and about 330 families that we serve. So that is how the second firm got started. And again, love to say I had a grand vision. I didn't. My client was late to a meeting.
Mm.
I asked somebody else, "How are you?" And that's how that happened. And then the third business is, I'm a big believer, David, that like you don't have to have these grand ideas of inventing a mousetrap. You need to listen. If clients tell you something's bothering them, that they're upset, that they're frustrated, that they need help, just do that. Well, clients were saying to us in both firms, gosh, we don't know who our trustee should be. Do you have any answers there? We sure would like that. And gosh, we've heard about some of these states that don't have state income taxes or that have really favorable trust laws. Can you help us here? We're like, well, maybe we should form our own trust company. And we've never done that, but we figured it out. And Donald Scott, who led that, he's a former partner of mine at Hush, the law firm, and left Hush to join TFO. He helped us figure out, should it be Nevada, South Dakota, Delaware, Wyoming? Where should it be? We landed in South Dakota. Those two RIAs own that trust company. And again, well, I'd love to say I thought it was going to be like that. I had this grand vision, it was going to be a big thing. I thought maybe it'd be break even. Turns out it's been enormously profitable, and it's one of the things the clients like the best, which just goes to show you, you don't have to come up with some really super inventive idea.
Yeah.
Just listen to what the clients want and solve their problem. And that's where the third company, the trust company, came from, and that was in 2018.
And now, so there's a couple ways that I could go with this. Let me first ask you about that trouble that the clients had with previous arrangements with their trust company. Is that because it was not all under one roof? Did they want what was the biggest complaint there with their?
So the challenge that folks have is, like most things, you can have the best business idea, you can have the best infrastructure, but if you don't have the right people in your business, let me just think about your business, right? It's difficult to succeed. It's true in estate planning as well. You can have a great trust agreement. You can have thought through how you're going to deal with the one kid that's in the business and the one kid that's not in the business. But who's the person? Who's the human who's going to be in charge of this, who you can trust, who has the financial acumen, has the expertise, is trustworthy, cares, knows the family? Who is that? That's really hard for folks to figure out, completely independent of our businesses. Just in estate planning in general, it's really hard to figure that out. Estate planning is about answering three questions. One, where does your stuff go? Two, who's in charge? And three, what are the rules? Well, if you figure the first and third out, where it's going and what are the rules, that's great. Who's it going to be? Who's in charge? And they struggle with that. They may have a family member, but the family member may not have financial acumen. Or they may have a family member, but there's an inherent conflict. They don't want a sibling being a trustee for another sibling. Then you're not brother sister anymore. Somebody's in charge, and that feels weird. Thanksgiving's not about Thanksgiving anymore. So their pain point was figuring out the who has financial acumen, who's trustworthy, who doesn't have, kind of family baggage and drama, and will allow the family to stay cohesive, together, at peace. That's the point, and that's what they struggle with. So they look for answers there. And of course, they say to us all the time, "Hey, what about you, Chris? Why don't you be our trustee?" Well, number one, I don't necessarily want to do that individually. And number two, I'm mortal, right? I'll die too. No one's escaped alive. So that was the challenge that they had. And then, of course, look, just like in the state income tax world, states are constantly vying for residents or for revenue, right?
Mm.
They're looking for ways to make things more attractive. Delaware figured a long time ago, hey, I'll try to attract corporations to incorporate here, right? By
Yep.
making the laws favorable. States are constantly battling for, let's make the most favorable trust laws that have the most privacy, the most asset protection, the most flexibility, lowest taxes. And that's what's happening. And so South Dakota is perennially on the top of that list, just like you guys have a list. There's other
Yeah.
publications that list those.
Yeah, no, South Dakota has become a popular place, I think, for trust services. It strikes me that you are kind of going in the from a different angle than I think a lot of the RAs that we talk to who, start out as wealth managers, investment advisors, and then move into or see the benefits of, not referring high net worth clients out to trust companies or out to estate planning firms, but bringing that stuff in-house, trying to bring that stuff under the RIA roof. You're coming at it from the estate planning angle in the first place, and then kind of, bringing in wealth management alongside. It's just this convergence, right, of investment advice and estate planning seems to be a real thing that's driving a lot of RIAs. You say that it's profitable. Do you think that for most RIAs, starting their or bringing white labeling a trust service or building that stuff in house would be as profitable? I mean, what do they need to look at for to make those numbers work, or is there anything that you're doing special that makes those numbers work that they're not? Because I think it's when they make that sort of economic decision about whether or not we do this in house or whether or not we still outsource, that's kind
Yeah,
of what's driving the.
great. It's a great question. So I think it's like the answer to every legal question ever asked. It depends. So I think it depends on this. One, make no mistake, the investment in capital, infrastructure, time, risk, just the financial commitment to starting a trust company, it's a whole big thing, and it's expensive and takes a lot of time. So it depends what game you're playing. We take the long view. We want to play the long game. For real, what we say every time is, how can we be more and do more for our clients? We're of the opinion that if you are simply managing money for clients, your relationship is terminal. It will end. You have to, because markets are going to go up, markets are going to go down. And the truth is, we can't control that. And we can't, we're not believers that you can pick and choose timing and securities to outperform in some material way. And we don't believe that's candid with people. So with the profitability of a trust company with other RIAs, I'd say this: one, be prepared to invest a lot of capital. It takes a lot. Number two, we didn't do it because we thought it was going to make a bunch of money. We did it because we were trying to be more and do more. Like, no kidding. If it's break even forever, we would have considered it a win. It makes the relationship stickier, and we measure our day by whether we helped a family. That helped someone. Now, it turns out when you do that, that isn't just, being a good person. That happens to be good business, and people will flock to you. So I believe that if you have the client base, and our client base, there's a significant amount of ultra high net worth and high net worth clients across both firms. Even though Ohio isn't technically a multifamily office because we don't have the tax offering, we have clients there who have hundreds of millions of dollars of net worth with us. If you have that client base, they need an answer. They trust you if you help them out. And so it will become profitable over time. You're just going to have to invest a bunch of money. You're going to have to play the long game, and you're going to have to view it as it's just another way to be more and do more. So, yep, I think it can be profitable, but you got to have the right client base for it, and you got to have the capital to put in it.
Yeah, well, let's talk about the client base just for a second. Then I know in the Arizona firm, so like a significant portion of the first advisors that came over were from GenSpring. Were they all from GenSpring? All 17 that you of
It
the
was
team
something
that you
like,
were?
16 of the 17,
Yeah,
something like
yeah.
that were.
Um, and so obviously non-solicits, they didn't, but some clients will follow anyways.
Right.
From there, from that point on, how do you market this to new clients? How do you bring in new clients, particularly on the high net worth and particularly upper high net worth family office model? What does prospecting look like in that environment for you?
So I think the prospecting starts with, and it really ends with, that same question: how can we help a family? So put yourself, and this is the exercise that we do, Pretend that you're the client, the ideal client. I'm going to make it up. And I'm going to say a client with, a $50 million net worth, and they have, I'm making things up, they have $25 million of liquidity. So pretend that client walks in the room. Pretend that client's you. What do you want? What do you want? What do you need? Well, I need someone to handle my portfolio who's going to tell me the truth, who's not going to put me in a bunch of products that lock me up, even if I fire them. I want to work with someone who only gets paid from me. 100% of the dollars that they get in the door only come from me, not Schwab, not Fidelity, not some other alternative, just me. Because I believe if you follow the dollars, you'll follow incentives, motivations, and behavior. Next, you'd probably want sitting around the table somebody who helps not just on the investment advisory side, but on the estate planning side. Maybe a former partner at a big national law firm. You'd probably want somebody who could help on the tax side, but not an unsophisticated CPA for the mass affluent. Somebody who worked with people like me all day, every day. So picture yourself at the table. You look to your right. Here's the investment advisor, the wealth manager who works with people like me all day, every day. Here's the CPA who does that. Maybe I want accounting and bill pay. I want somebody who does that all day, every day. I want somebody who does the estate planning for people like me all day, every day, not doing the documents, but architecting it. I want somebody who can help with financial literacy to help teach my children this, help me with family governance so I can answer a central question. What is the wealth for? What's the purpose of the wealth? And finally, I'd want a team that says to me, hey, I understand families like yours well. I know what keeps you up at night isn't whether your portfolio is up 6 or up 8. It's you're worried about the effect of your wealth on your children. You're worried about whether the wealth is going to hurt them or help them. You're worried about not becoming part of that statistic of 90% of families go shirt sleeves to shirt sleeves in 3 generations. That's what you're worried about. Here's a team that will help you articulate the purpose of your wealth, write it down, have family meetings, but not in some disorganized, ad hoc way, in a super intentional way. So if you don't know what your wealth is for, here's a deck of cards. We call it Wealth For. There's 25 cards in there. Every card has a potential purpose of wealth. There's some blank ones in there if we've missed one. You take a deck of cards, your spouse takes a deck of cards. Go into separate rooms, pull out your top 5. Come back together. We'll meet with you. We'll tell you that you and your spouse's top 5 don't match. And then we'll help reconcile what are your top 5. Then we'll have family meetings, not with just you, but your children. And the reason this goes to prospecting is because when you walk in that room, I'm not kidding. That is who you want. The CPA, the wealth manager, the estate planning person, the financial literacy person, the family governance person, the accounting and bill pay person who looks at you and says, we've got this, and we only get paid from you. If you do that and you're genuinely measuring your day by just asking, did I help this family today? The world will beat a path to your door. You're like, wait a minute, Chris. What if a client says to you, hey, look, here's the funny thing. I'm in multifamily. I do apartments. I don't invest at all in the stock market,
Mhm.
but I sure do need your help. Will you help me? Sure. What's that engagement look like? $250,000 a year to do all these things. So what? You don't have to have assets to manage? We don't. We will help you with that. So the way you prospect is these families are desperate for a solution that does create the one-stop shop
Mhm.
where the provider sits on their side of the table, only gets paid from them, and legitimately has the expertise that they need. The challenge that we have isn't the prospecting. It's not. The challenge is, our tax folks, for example, are really good. Word spreads. And then folks are like, hey, can we hire you to do the tax work
Mhm.
for our family? I don't want to be a CPA shop. No disrespect to them. That's not what I want to be. This is a precious resource. I want to use it for family office clients. So our challenge is making sure that we accept the right engagements, we price properly, and that we constantly are looking for ways to be more and do more. If you do that, the prospects and the clients will come out of the woodwork. They'll run to you. And that is why we've had ridiculous rates of organic growth. We've done none of this growth inorganically in
No,
both firms.
yeah, no acquisitions, no.
No, I mean there's an advisor here or there that we pick up, but
Right,
nothing,
right. Mhm.
material.
So it's really that 360-degree service model
Yep.
uh, that brings the clients in, particularly the type of clients that you're targeting. Um, you talk about the economic efficiencies of pricing this stuff, and that's really what you concentrate on. Would there not be an economic efficiency to combining these two firms and just having different service models for different levels of clients?
It's a great question, and it's one that we've absolutely looked at, and it may be something we do over time. That there very well could be. What we've done historically is we've said, "Hey, look, the model we have, is it serving clients well? Yes. Is it growing organically? Yes. Are our colleagues happy? Not subjectively, can we measure it? Do we win best places to work? How are our 360 feedbacks going with our colleagues? Is our retention there? Are we a destination employer? Have we given them a path that they can choose that allows them to be at the firm and be like family forever? If all of those things are going well, both firms are growing and they're different, right? I mean, 25 CPAs in one, none in another, 10 accounting and bill pay people in one, not in the other. They're different. If that's working, do we bring them together or do we keep doing what we're doing, but say, hey, ought we share best practices? Ought we come together, whether it's in the software that we're using or with our operations processes that we do? Obviously, our investment philosophy is identical, right? Ought we do that and share that way? So Brady Fineski runs our Ohio business and is phenomenal. Scott Horn runs Phoenix and is phenomenal. They have leadership teams that are separate. And Scott and Brady talk all the time. And then, of course, I'm the CEO of both. And so I see both, and we're constantly sharing best practices. So might we combine them at some point? Maybe. But right now, the service that we're providing, the experience for colleagues, the experience for clients, the growth, you almost like don't want to touch it and like no
Mhm.
one move,
Yeah, no, I get it.
right?
Do you have some thoughts about for this kind of really bespoke service model that the family office model requires, uh, some ideal number of kind of employees to clients? I mean, how, one of the things I think a lot of RAs struggle with who are trying to move upscale to where you are is this notion of, we have an advisor, that advisor has 200 clients, and there's no way that they can do this kind of
Right.
bespoke planning for each of them. Uh, how do you think about, that ratio between uh, service employee, or, employees that service the clients versus number of clients? Is there some magic metric there, or do you just uh, feel it out as you go?
Yeah. So the direct answer is we don't have a magic metric.
Yeah.
The direct answer is so in our family office, what we do is we actually have folks record time where they spend their time, and they have to submit their time
Mhm,
weekly.
mhm,
We see what clients they're spending time on. We measure that for reasons that may not be obvious. It is not to see if we're profitable in that engagement. Part of it surely is that if we're spending crazy amounts of hours on something, something's wrong. Or maybe we've mispriced it or something. Part of it is
Mhm.
that. But it's the other way. We're in trouble if we have a bunch of clients that we're not spending a bunch of time on.
Mm.
Maybe they're being underserved and they're simply not saying anything. And we don't know. So we learned a long time ago, track in the multifamily office business, you better track time. You better make sure that clients, of course, that the pricing is right, but that the clients are being properly served. So do I have a metric? No, but look at the two firms. We have 330 families in one and 81 colleagues. We have about 1,500 families in the other and 63 colleagues.
Mm-hmm.
Right? You can see the math.
Kind of tells
Now,
the story right there. Yeah.
it does. And the other point is we're big believers in everyone, colleague wise, they have their own gifts, talents, and abilities. Some are well situated for clients, others enjoy more of the operations piece. Let's find people the right seat on the bus and get them there. And then let's incentivize them to make the business efficient and profitable. There's a bunch of different ways that we do that, but we pull together to do that. So I don't have a specific metric. This is where it's landed out, and it's generally stayed in that range.
Yeah, very good. Anything, even on the family office model in Arizona, which has the tax involved, is there something that's you're finding that clients are asking for that not just you, but maybe the industry at large doesn't yet provide, or something where where you see the next kind of horizon for service to high net worth or high net worth clients that we're just kind of on the cusp of, or is there some service that's needed that no one has figured out yet?
Yeah. So we have, and Brady and I were just working on this the other day. We have a circle. So just picture a circle. At the top of the circle, there's a dot. And then just like a clock, there are dots all around the circle. Each one of those dots is a service line, something we do. When we do it, we fill in the dot. When we don't do it, we still have the dot. It's not filled in. We don't have anywhere near all the dots filled in. So, for example, again, take your client, your ideal client. What do they need? What do they want? And what do we provide? Well, the truth is, look, it is a bit of a mess being a high net worth client. Somebody has to talk to their life insurance professional,
Hmm.
their property and casualty insurance professional, their banker. We don't own a bank. Somebody has to deal with their family dynamics. Look, it's trite but true. Families have issues inside their own family, the relationships among siblings, parents, etc. There really are needs there, therapy needs, counseling needs, etc., where they need help. So if you think about that circle and you say, what have we not done? And where do we need to get? Well, we don't. I mean, Hush is a separate law firm for sure, but there's a decent percentage of our TFO clients who don't use Hush. How is it that we can better coordinate the legal services, the property and casualty insurance services, the life insurance services, the family therapist needs that they have? Or what family doesn't have a health issue eventually? What family doesn't have a need? Yeah, so what I believe is we're talking about this circle. You have to fill in those dots. You have to be the indispensable place that they call when they have those needs. And so if somebody in the family, God forbid, is diagnosed with cancer, of course they're in a medical system. They're scared, they're concerned, they're worried, they're freaked out. Who do they call? You want them to call you. You want them to say, you know what? We know a company that helps you navigate that. We can work with them to do that. That matters. And you're like, but Chris, there are no basis points for assets under management for that service. No, they're not. Well, will clients pay for that? I don't know. Would you? Of course you would. You've got to be like a family member for these people. You have to be that. So when you look at our net promoter score, it's off the charts. And if you look at the comments that folks make, it's off the charts because we are the phone call that you make. And the RIAs, the firms that navigate, evolve to the place that no matter what's going on, you have a kid who, God forbid, has developed a substance abuse issue or a mental health issue. Who do you call? I don't know where to send him, Chris. Hey, we have other families who struggled with this too. We don't have somebody in house right now, but we have some connected solutions. Might we have some people in house eventually? We might. When we have that, when you have that service, when you are that phone call that folks make, that will make the difference. That is the winner. And I don't define the winner. I do not define the winner as the one that has the most states, is in the most offices, even the most people. It's the ones having the most impact, making the biggest difference. That is huge.
Yeah,
That's the winner.
so far no acquisitions yet. You've picked up an advisor here or there. Might that change in the future? Would you? I don't know what your growth plans are, your growth trajectory, looking out into the future. Your ambitions here are. Can you tell us a little bit about where you see yourself maybe in 5 years, 10 years?
Yeah, great question. So I get asked this from time to time. So let me answer it this way. So we have, like, Brady, when he presents to our executive committee, same with Scott in Ohio or in Phoenix, he presents a package, right? It's digital, but it's a package. On the first page is a cover sheet. And on that cover sheet, there's a number. And the number isn't our assets under management. It's not our revenue. It's most certainly not our profit. It's the number of families we serve. So the one that I just got in Ohio, it said on the first page, 1,503. What? Because that's the metric. That's what I'm looking for. Did we help another family today? So what is my growth plan? Acquisitions, non-acquisitions, organic, inorganic. My plan is for 1,504. That is what I want. I want to help the next family. What we're on fire about is that. Now, can we do that organically? Well, we've demonstrated that we can do that organically for a very long time with silly growth rates. It's not the only way that we can. Could we do it inorganically? We could. Might we? Perhaps. We've actually had some folks approach us, say, hey, would you consider acquiring us? My challenge is we might. I'm humble enough to know I don't know what I don't know because we haven't done it before. So I would need some help in that. And I want to make sure that if we do it, that we've got people who are values aligned, purpose aligned. I am not the CEO of a firm who believes whoever dies with the most AUM or assets under management wins. I don't. It's the impact that we have. It's the difference that we make. It's the lives that we touch. If inorganic growth helps there, great. If it distracts from it, no. It better be people who are similarly values aligned,
And I
purpose
imagine you
driven.
have to have had firms that have approached you about acquiring you. I hear it.
On the daily. Yes. Yeah, yeah. That happens all the
Any
time. Of course.
thoughts there? It doesn't sound like that's something you'd pursue, but I imagine at some point,
Again,
some of these founding partners,
no.
yourself included, will need to monetize this in some way and take some chips off the table.
Yeah, it's a really interesting question. So I would need to be persuaded, and Cleves, my business partner, I am beyond blessed to have him as a partner because we're both completely aligned on this purpose
Mhm.
driven approach. That's the win for us. We're both, blessed and fortunate. I'm a lawyer at a big law firm. I
Mm.
frankly live off of what I make there. I don't live off of the RIAs. He's got, plenty of chips off the table as well, and he's been enormously successful in other businesses also. We don't need chips off the table. So what would motivate us to do that? It isn't that we wouldn't be motivated. It isn't that we wouldn't consider it at some point. It has to be someone who persuades or convinces us that here's an opportunity to impact more lives. So I'm going to tell you just a quick story because I think it goes towards answering your question. Long, long time ago, I was asked to give a speech in Dallas, Texas, to a financial services group. Speech was on estate planning or something. Speech was going to be Monday morning at 8 a.m. They said, hey, please fly in the night before in case flights are delayed or whatever. That way you'll be there. I said, sure. They said, come to the cocktail party at 6. I said, great. I did. I show up at the cocktail party at 6. And they're like, Chris, we are so happy that you're here. And I said, well, sure, happy to be here. It's like, no. You are a big baseball fan, right? And I said, well, St. Louis Cardinals, or I'm from St. Louis, so sure, St. Louis Cardinals fan. Well, Clayton Kershaw, the pitcher for the Dodgers, is here. This was back in the day. This was in 2011. And he was at the time, I think, 23 years old or something. And I said, oh, that's great. They're like, no, it's not great. Clayton's here with his wife, Ellen. They want to talk about an orphanage they're building in Zambia to kids who lost their mom and dad to HIV. And they will not do public speaking. They'll only be interviewed. Their agent was coming tonight to interview him. We just got word their agent fell and is literally in the hospital. We desperately need someone to interview Clayton and Ellen Kershaw. And I said, when? They said, right now. I said, okay. So I get up on stage with Clayton and Ellen, and I said to Clayton, I said, hey, Clayton, you're 23 years old. You're going to win the Cy Young Award this year. You've just won the pitching triple crown. You led the league in wins, ERAs, and strikeouts. What does it feel like at 23 years old to be the best pitcher on the planet? And he laughed. He looked at me and he said, that's so funny, Chris. You think of me as a pitcher. You think I throw a ball fast, I make a ball move, I strike people out. I don't think of myself that way. You see, someone will win the Cy Young Award next year, Chris. Someone will win the pitching triple crown again sometime. Those things won't last. But what will last is this orphanage Ellen and I are building in Zambia for kids who lost their mom and dad to HIV. You see, Chris, pitching is just my platform. That's it. It's a platform. My challenge to you, my question to you, Chris, and to everybody in the audience, pitching's my platform. What's yours? And yeah, I don't work with Clayton. He's not a client. I happened to run into Ellen at an event recently, but he changed the way I thought about this business. This is just a platform. That's all this is. And what Cleves and I talk about is that this is our platform to touch lives, help families, make a difference, have an impact. So if somebody approaches us about acquiring us, answer this. How will it be a better platform to touch lives, make a difference, help families? And if you can persuade me of that, that's what we're after, not whoever has the most AUM wins, not who's ever in what state wins. Is it that? That would be interesting. That would be persuasive. But no, we're not looking for some kind of transaction, frankly, either way. We're just on fire about trying to help family, 1,000.
Well, that's great. Chris is fantastic. We're going to get the hook here in a minute, and I kept you longer than I promised. I could talk to you a lot longer about your firm. I enjoy it, and hopefully we get a chance to do it again soon. But thanks very much for joining us on the RIA Edge podcast.
My pleasure. Thanks so much for having us. Take care.
And thank you for listening. Schwab Advisor Services is a proud supporter of the RIA Edge podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com.